Welcome to The Tax Lawyer here on the Legal Broadcast Network. I'm Scott Drake with my guest Robert Wood, a tax lawyer in San Francisco at Wood LLP. This is an article written in Forbes, Beware of More IRS Audits, especially for the wealthy. Rob, you're trying to scare the hell out of us. What's going on here?
No, just trying to report the facts.
Okay. So what you're saying here is that the IRS, for one reason or another, is beginning to scrutinize returns a little more closely, and the chance for being audited is going up, and especially if you make more money.
Yeah, I mean, I think in general, of course, that it's easy to prove that. I mean, the IRS releases statistics every year, and they're sort of rifle shot kind of statistics. They're just sort of a few scattered statistics based on income amounts and this kind of thing, but the trend is in favor of more audits, no question, and the IRS is actually, I think, proud of that. They're trying to do more, like other government agencies and like most businesses these days. It's the sort of do more with less kind of mentality, and the IRS, with clearly limited resources, is trying to do that. So I think wisely they're focusing more on audits where they think they can get more money, and that typically means higher incomes and more sophisticated returns that are more likely to result in additional tax revenues.
So what does that mean for someone like you and your clients? It's just better documentation is needed, and just to be more careful, I guess.
Yeah, that's right. And one thing that I think is deceptive, and I probably play on this sort of common misconception in this Forbes piece, is what is wealthy, and there are, of course, that's a kind of eye of the beholder term. I mean, does it mean $100,000 a year? Does it mean Warren Buffett? Or where in between those extremes do you sort of draw the line? And it's not, there's no clear answer. I mean, the IRS statistics, which I think I've linked to here, are announced based on income levels, but there's one thing that's getting some press, and that's this so-called global high net worth group, which I have been calling the Rich Squad. It's a sort of a special group of IRS auditors that are focusing on the wealthy. I think for those people, it's not you and me, Scott, that they're looking at. It's sophisticated, really high net worth people who have very sophisticated returns, not just a lot of income, but a lot of assets. And we're talking typically about $10 million or more. So, and there are plenty of people, it's a small group, but there's still plenty of people in that group, and these audits are very intense. And Scott, to your point, very document intensive. So I think where you are creating entities, even if you are operating on a much smaller scale than that, if you own a home, you own automobiles, you maybe own multiple homes, a business or an interest in a business, try to keep good records, try to actually enter into agreements, keep copies of invoices. Do as much as you can to essentially get ready on the assumption that you will be audited. I mean, you may not be, in which case you'll be very happy, because I think there's some karma here. If you keep good records and you keep everything sort of pristine, you're not going to be upset or embarrassed or reluctant to turn over things to the IRS in the event of an audit. Conversely, if you are looking over your shoulder all the time and have a very bad record and figure, I'm going to clean it up later, my painful experience with clients is that you probably won't do it.
All right, Rob, thank you very much.
Thanks.
Rob Wood practices law with Wood LLP in San Francisco. He is the author of more than 30 books, including my favorite, Taxation of Damage Awards and Settlement Payments. You can read him frequently in Forbes and also at taxlawchannel.com. I'm Scott Drake on the Legal Broadcast Network.